Good morning, everyone. Welcome to Windsor Brokers Live Daily Market Outlook. Today is Monday, 17th of December 2012, 1 week ahead of Christmas, with the markets picking up pace. A lot of action seen last Friday and overnight. Top performer, of course, is again dollar yen that hit fresh height, fresh 20-month by basically high dollar against yen, or yen hit fresh 20-month low versus the dollar after the Japanese LDP party won the elections. More or less expected news, but gap higher opening seen last night. So the price of dollar yen surging through the previous yearly peak at 84.17, so far 84.32, with the positive tone still dominating, and studies aligned positively, seeing potential for a further stretch higher. Of course, some corrective action not ruled out at this point. Euro also holds positive tone, cracking a 132 overnight, 131.86 seen so far, ahead of a brief corrective easing. The positive structure is still intact, and the most likely attack at 132 could be the likely scenario, similar with the sterling that is attempting at 162 after last overnight's spike higher at 161.99 was followed by a brief corrective easing. Dollar Swiss is that back foot holding below 92. Last week's close below this level, and overnight stretch down to 91.50 keeps the downside focused. Also, the gold is the third consecutive day in the easing, 16.89 currently, 16.86 in so far, touching the previous support and the double bottom at 16.84. That looks more negative at this point, and seeing a potential for further extension higher following the corrective action that failed at 17.23 last week. While the crude oil is still treading water, holding around 87, currently still below the 87.66 last week's peak, but studies slightly aligned towards the upside in the near term. Still not much action seen on the crude oil trading in the past couple of days. Important, as we said, the elections in Japan that occurred yesterday, pushing the yen to its lowest levels against the US dollar as a part of a broad skid after Japan's conservative Liberal Democratic Party, which is committed to aggressive monetary easing, won a landslide victory. The LDP surged back to power in yesterday's elections, giving ex-Prime Minister Abe another chance to take the helm. And the LDP and its ally, the new Komeito party, secured the two-thirds majority needed to overrule Parliament's upper house, meaning the new government has a greater chance of pushing tough its policies. This was basically the reaction of dollar yen, was the immediate reaction of the market on the news released after the Japanese elections. Important also today is the speech of ECB President Mario Draghi that is due in the afternoon, and he's going to talk. It's due at 14:30 GMT. He's going to be speaking in Brussels, and due to testify about the economy at the quarterly hearing of the Committee on Economic and Monetary Affairs. This is basically one of the main releases for today, as well as U.S. fiscal cliff news could come at any time now, as seems that the negotiations between Republicans and Democrats are showing signs of progress. Since we are talking about indicators, let's take a quick look at today's calendar. As we said, the euros, the Mario Draghi is due to have speech at 14:30 GMT. Before this, at 10 o'clock, we have October trade balance for the eurozone. Slight decrease in the surplus from September at 11.3 billion is forecasted at 10.8 billion today, and then we have some data coming from across the ocean. 1330 is Empire State Manufacturing Index from United States. That is, according to the forecast, showing some improvements, -0.7 compared to -0.2 minus 5.2 release of last month, and foreign long-term purchases from states due at 1400 GMT at 24.3 billion compared to 3.3 billion in the previous release. And basically these are the important releases for today. Of course, the focus remains on the Mario Draghi's testimony at 14:30 in Brussels, and we're going to take a look at the technicals to see the latest movements and what we can expect in today's trading. As shown on the hourly chart, if you see it, okay, you can see it now. The euro hit 131.86 on its strong rally. The latest upleg is from 128.76, 7th of December. Low where it hit 131.86 after surging through significant barriers and previous tops, 131.25, 131.38, and 131.70 open way for basically for a stronger extension higher, as shown on the weekly chart. I think we can see it much better. This congestion of 3 months from mid-September is now due to be broken higher, as the price already broke above the main bear trend line of peak of 2011 at 149.38, and also cleared the 38.2% retracement of the entire down move from 149.38 to yearly low at 120.42 from July 2012, seeing a potential for a fresh stretch higher. Of course, break above 132 as psychological barrier is required to confirm the positive stance, and the breakout that will open way for a fresh leg higher with the 132.82. We have the 1st of May high that is seen as the next target, along with the psychological 133 level. From the other side, the brief easing seen on the overbought near-term conditions hourlies at this case has so far been contained at approximately 131.40 by ascending 20 days exponential moving average, while the other important supports in case of deep dips are at 131.00 previous highs, and then we have around 137.60. These are the lows of last Friday, as well as close to 38.2% Fibonacci retracement of the upleg from 128.85 to 131.86. In case of any deeper dips that are seen unlikely at this point, as it seems that the pair is gaining pace again, and indicators started all to point higher. Most likely scenario is attack at 132.00, that break of which to open way for a fresh phase higher. As we said, the break above the congestion zone of past 3 months at 131.70, 131.38 is to open way for fresh extension of the broader recovery from 120.40 to yearly low of the euro against the US dollar. Any dips as set 131.00 and 130.70 should be contained in any case, with the first one being reinforced by ascending 55 days exponential moving average, and ideally any deeper reversal should occur. Any deeper dips should occur, reversal should occur at around these levels in order to keep the immediate bullish structure in play for, as we said, test of 132.00 and possible stretch higher towards 132.80 and 133.00. Extremely positive tone seen on the 1 and 4 hour, 4 hour chart. I do apologize, as bulls are still strong, while hourlies are slightly losing a pace at this point following pullback from overnight's high at 131.86. But overall, picture remains firmly bullish, as shown. The bulls are firmly in play on the daily chart. That keeps the upside absolutely favored at this point. Of course, a clear break above 132.00 is required to confirm more focus seen on the Mario Draghi speech today. That will also give put some more light in the current trading of euro dollar. But overall, negative dollar negative tone keeps the single currency well supported for now. British pound shows the similar picture like euro dollar, attacking at 162.00. Overnight spike higher, hit 161.99. This was on opening, and then a brief easing seen down to 161.56. Basically the 38.2% retracement of the initial upleg from 160.84 to 161.99, with the fresh strength now underway. Studies are aligned towards the upside, slightly stretched on the hourly, and the 4-hour indicators are still showing enough room, as they're all pointing higher for a possible final thrust through 162.00. That is also marking a 76.4% retracement of the down leg from the yearly peak at 163.08 to 158.26, low of 15th of November. That will open way towards the upper barriers. 162.16 is the initial one high of 5th of October, and then 162.71 28th of September high, ahead of 163.00, 163.08 strong barriers. Basically clearance of initial barrier at 161.74, 78 previous double top, and a clear break above 162.00 is expected to confirm and refocus 163.00 on the downside. 156 overnight low is seen as initial support, also reinforced by Fibonacci 38.2% retracement. Then we have 50% retracement, also 55 days exponential moving average at 161.40. Break below 161 could be risky. 161, 160.84 over last Thursday's low could be risky for the immediate bulls, as this would be signaling a possible stronger reaction, a stronger corrective action, and further retracement with the break below 161.00 and 160.84 to focus 160.00, the low of 7th of December 2012, also near a 50% retracement of the larger up move from 158.26 to 161.99. So far as set, the near-term structure is positively aligned, and sees immediate focus at 162.00, break of which to open 162.80, 163.00, our next upside targets. As set, top performer dollar yen, strong bullish stance and gap higher opening on overnight on the beginning of the week trading in the Asian session, hit on the opening 184.32. This is the fresh 20-month high after breaking above the previous high at 84.17 posted on 11th of March 2012. Now looking for test of on the upside 84.50 and 85.00. That is also the 200 days moving average on the weekly chart. Back the near-term action, so far the corrective easing of fresh high at 84.32 has been contained at approximately 83.85. This is also close to the previous high of last Friday, that is 83.95, and still gap still remains open. So basically the more focus is still seen towards the upside, as easing from 84.32 so far found the support, filling the gap, and the further extension below 83.30, 83.00 could be risky. At this point, this support zone 83.30 and 83.00 is seen as a good support and expected to contain any stronger reversal of the pair, any further retracement. This is marking approximately 50 and 61.8% of the latest upleg from 82.09 to 84.32, and then any stronger dips should be contained at or above these levels. So we're talking about 83.30, 83.00 in case of a break below initial support and session low at 83.84. That will signal possibility of filling the gap and the further retracement. However, a positive tone that dominates, although the caution is required based on very stretched daily studies that RSI is already entering the overbought territory, and MACD is quite stretched, with the brief signals of divergence seen already on the daily structure. That could be initial signal of some a more significant corrective action of dollar yen, yet no firm signals, though the stochastic is now trying reversing lower, but all the other indicators are still firmly pointing higher, that again see more potential towards the upside, with the bulls strongly in play on the daily and the 4-hour chart, while hourlies are now losing pace due to the pullback from 84.32. Overall, pardon, a positive tone still dominates on the near-term structure, and still sees the upside more favored. Should 83.30 and 83.00 hold the downside, we see prospects for a stretch towards 85 psychological level and 200 days weekly moving average. And finally, from currencies, dollar Swiss, that is firmly negative and holds at the back foot following the negative opening, gap lower opening today, with the fresh low hit at 91.51. This was on opening, following closing of last week at 91.77, with brief corrective action being capped by below the psychological 92.00 resistance, and now fresh weakness is underway as descending 20 days moving average so far maintains bears and keeps the upside limited at initial barrier at 92.00, 92.13 previous strong supports now acting as initial resistances ahead of another strong one previous base at approximately 92.40 zone. This is also marking 23.6% retracement of the down move from 95.11 to 91.51, and basically these levels 93.40 are expected to cap the upside for now, as any break higher would provide the temporary relief and allow the pair for some stronger corrective action, but quite negatively aligned. The near-term studies still see much more potential towards the downside, with the 91 as round figure support seen as the near-term target in case of any bounce, corrective bounce being held at 92.40, below 92.40 resistance zone. And a quick look at yellow metal, that maintains a negative tone and keeps traveling lower. A 1686 is the low seen at the beginning of European session, following unsuccessful corrective action from last week's low at 1689. That was capped at 1700 psychological resistance, with the descending 55 days exponential moving average so far capping the downside. 4-hour chart shows us a negative tone that dominates at this point, and immediate risk seen on the retest of 1684 double bottom. That will open way for further extension. We have the Fibonacci expansion at 61.8% at 1681, the expansion of the wave down from 1723, and of course the risk comes down to our key near-term support at 1672 low of 5th of November this year. That also marks 61.8 Fibonacci expansion of the down leg from 1752 high of 23rd of November, as a part of the larger downtrend from 1795 yearly peak of 5th of October 2012. And basically these are the downside targets, 1684 and the 1672 seen as downside targets, with the daily studies holding a firmly negative tone, and the bears being in control on the larger picture, while upside stays basically faces initial resistance at 1700. Then we have the previous lows at approximately 1710 zone, 1705, 1710, where is also the 55 days exponential moving average ahead of very significant 1723, and basically only break above this level could prevent immediate downside risk and allow for some stronger recovery. Otherwise, more focus is still seen towards the downside, as all lower and larger time frame studies are still maintaining a firm bearish tone, while the price action holds below important and initial resistance at $1,700 per ounce. And finally, the crude oil, not much action seen so far, though the Studies are slightly aligned towards the upside following a bounce of last week's low at 85.20, but the price is still unable to clear the initial spike and the recovery high at 87.66, break of which is basically required to improve the immediate structure. Though the price broke back within the channel after a brief break below the channel support and extension down to 85 at 20, slight improvement on the studies seen on the 4-hour chart, though the reversing stochastic sees not much potential towards the upside at this moment, and still negative tone on the daily studies with the descending 55 days moving average seeing still the upside there limited 87.66 previous high and 88.00, which is 55 days moving average, are seeing as the main obstacles on the upside. And as we mentioned in previous sessions, break above 88.50 would improve the structure and avoid the immediate downside risk. Otherwise, we might see again attempt to the levels close to 85, and the break of which to again turn focus down towards our key support at 84.05. So far 87.09 is the high of the session's high for today. This is our initial resistance, and then 87.66 and 88.00. Break of the later is required to improve the near-term structure. Approximately this is between 50 and 61.8% retracement. Break above these levels and 88.50, as we said, this is close to 61.8% retracement to refocus the upper boundaries. Otherwise, more risk is seen still towards the downside with initial supports at 86.00, 85.80, and then our key supports at 85.35 and 85.20, below which again to shift immediate focus down to 84.05, key support of crude oil in the near term. That's all from me. Please, questions, if you have any, you can submit them now. Okay, we have euro yen. It's quite a similar situation to euro dollar. Strong bulls are in play on the euro, as the euro remains quite well supported, and the weakening yen sees giving way for the fresh strength. Basically, the latest rally, we are in the weekly chart just to show you the magnitude of this latest rally from 94.10 low of year posted on the 22nd of July 2012, nearly fully retraced the latest downlet from 111.42 on the overnight's gap higher opening and stretched to 111.17. So far we're gonna go, this is the initial barrier, and then we have 112.00, 112.15 round figure resistance, and the 61.8% retracement of the larger down move from 123.31. This is if I'm not mistaken, the high of 2011, correct, posted in April 2011. That will come in immediate focus after clear break above 111.42. So we will be looking for 112.15. Daily structure is overextended. The studies are overextended at this point, though, and not yet showing any firm signal of reversal, but signaling that some corrective easing is not ruled out at this point. A brief consolidation seen on the hourly chart following a gap higher opening to 111.17 after Friday's close at 109.82. 86, 80, 110, 30 zone so far contain the dips where the price is currently congested. Signals again of divergence seen on the hourly MACD and the RSI that increases risk of possible stronger corrective action. We have the immediate support at approximately 110, 23.6% retracement, and the last Friday's high, while more significant, comes at around 109. This is the low of last Friday, and also near 38.2% retracement of the upleg from 105.96 to 111.17. As said, the hourly studies are more negatively aligned, with also the 4-hour indicators now starting to point lower, being deeply in the overbought territory, giving another signal as stochastic is already reversing lower for possible some possible stronger corrective action. As said, daily structure is still positive, again entering overbought territory. We have quite good signals for some more significant corrective action of euro-yen at this point, as the pair basically fully retraced the yearly descent from 111.42 to 94.10, and facing a very strong barrier at 111.42 might signal some hesitation and the pause in the current strong rally. From the other side, of course, strong bullish tone seen on the euro could, despite the technicals that are signaling a reversal, could extend the gains even further up, and target our test our upside targets at 112 and 112.15. Is there any other question, please? It seems that we covered all relevant things for today. In that case, I would like to thank you all for being with us. I believe that the content of the session was useful for you. Any suggestions, any comments, anything that we do not have in our offer, and you would like to hear any instruments that exists in the Windsor's platform, we are ready to add it. You can contact me on the email shown on your screen, analysis@windsorbrokers.ltd.com, and I'll be glad to add anything that will be of help for you. We are back. The comment, there is a question about euro-dollar. As we said, it's quite positive. We are in the basically brief consolidative rather than corrective phase at this point, with the 131.40 so far holding the downside, and the price is already bouncing high. I would say still corrective action is not ruled out, and I would say down though to 131, 130.80. Any break below 130.80 could delay immediate bulls. Otherwise, any reversal above these levels, it would be just seen as a brief corrective action, and ahead of a fresh extension higher. It looks that the pair is currently on the hourly chart, even better shown on the lower time frame. 15 minutes shows the basic attempt at above 131.40 overnight's low, though the upside is still limited. We need it seems that the near term is still lacking momentum for some stronger action. Probably that some further consolidation is not ruled out at this point, as obviously we are lacking momentum for a fresh push higher. But overall positive tone, I would say, still keeps the focus at the upside, and for possible break above key barrier at 132.00. Of course, if we stay above 131, 130.80, break below 130.80, this point could be quite risky, as this would sideline immediate bulls and allow for deeper reversal. Then we will have 130.36, 130.40. Basically, this is the low of last Thursday, and approximately 50%. And then key support, psychological 130.00, also 61.8% Fibonacci retracement of the upleg from 128.85 to 131.86. For now, I would say we are in the corrective consolidative phase, with the downside expected to be protected at 131.00, 130.80. on the upside, the break above 131.85 overnight's high, and the 132.00 is to open way towards 132.80 and the 133.00. Any further question? It seems that we have finished with the questions for today. Again, thanks for being with us, and expect to see you again tomorrow morning at the same time at 8 o'clock GMT. Wish you a nice day and very successful and profitable trading. Good luck.